We are going to rank the 8 worst stock market crashes of all time from oldest to most recent. And at the end, we're going to see where the Trump crash lands on the list. So it's going to be a fun one. Market crashes tier list. Everybody loves a good tier list. Let's dive right in.
There we go. Number 1, the Panic of 1873. What is this one, Gus?
Panic of 1873, man. This is the OG. I suppose the tulip bubble in the Netherlands is the real OG, but this is the OG U.S. stock market crash right here. Went from September 1873 to September 1877. 4 years is rather long. Total losses are indeterminate. That's going to be true for both of our first two because they're pre-1900. They weren't really, there wasn't indices and they weren't really keeping good track of data. But 14% peak unemployment is confirmed. 89 out of 364 U.S. railroads went bankrupt as a result. 18,000 failed businesses in 2 years, which is crazy in a vacuum, and it's crazier when you consider the U.S. population in 1873. So yeah, this is the OG. I've made my tier picks already. We can decide where we want to place it. But yeah, Panic of 1873 is the starting point. What do you got, Errol? What tier does this belong in?
What tier does this belong in? I know after this we'll do our tiered list, but I think I'm gonna have to wait. I'm gonna have to soak in the other market crashes and really dissect some of these to list these. But this one sounds pretty bad. I feel any market crash prior to like 1950 just sounds really dark, and that's the kind of vibes I get from the crash of 1873. I wonder what the crashes were like.
Yeah, look at this newspaper, man.
Right. That's what I'm like. I know it's a little hyperbole, even in the graphic, but I mean, that graphic's not looking too. What is it called whenever they use the cartoons and different graphics to depict history? I forget what it's called, but that is a great piece to explain the emotions that was going on around 1873 when the market was crashing.
Yeah, no, for sure. I'm trying. I don't know what that term is called either, but anyway.
Yeah.
All right. Whoever said it, somebody said it in chat. Next up is the Panic of 1893. I'll let Errol take it away with this one.
Yep. Panic of 1893. Again, prior to 1900s, these were some dark days. May 1893 to November 1893. Total losses, intermediate, insufficient data, no standardized indices at this time, just like 1873 was the last one.
Yeah, 20 years apart.
20 years apart. 17 and 19% peak unemployment, whereas the previous one was about 14%, if I'm not mistaken. Led to a 4-year recession, 15,000 failed businesses, and 500 failed banks. The way that I see it, Gus, a little bit of an improvement. I mean, 15,000 failed businesses when the previous one was 18,000, but unemployment was peaked about 4 to 5% higher. So took a little bit more of a hit there. But I'm gonna have to rank this one. This one is gonna go hand in hand with the previous one. Again, we'll wait to rank these ones. But again, tough days before 1900s. I don't know what you feel from the 1893s or what you've heard before this, but I see over here we also have the War of Wealth. So maybe a lot of wealth transfer around this time. Things are new. It's prior to 1900s.
Yeah, this one, I don't know. I agree. I feel like this one is maybe just a little bit less severe than 1873. They're very similar. This one you have the banks failing. Previously, we had the railroads failing. So two sort of different things. But almost 1 in 5 people being unemployed in the entire country is pretty wild to think about.
That's insane. Yeah, no, that's insane. Now, this one, Gus, the Great Depression. That just sounds depressing.
This is the
photos in black and white. The photos in black and white. But what do we got here?
Yeah, there's just no question. This is immediate S tier. This is the GOAT stock market crash. But 10-year depression, October 1929 to 1939, October 1939. The Dow Jones fell 90%. We think it's pretty crazy that we're dropping 15 and 20% these days. 90%. There was 25%, essentially 25% peak unemployment, which is even crazier than the previous slide. 1 in 4 people are unemployed in the country. 16 million shares traded on Black Tuesday, which that doesn't sound like that crazy of a number now, but proportionate to the population at the time, that was completely absurd.
And the access to the market, yeah.
Oh, yeah. You had to. Right. I don't even know. I actually don't even know. Could you call? Were there phones, reliable phones at this time? I don't even know how stockbrokering worked before we had phones, man.
Right.
But anyway, also kept FDR in office for 4 terms. World War II was obviously a big role in keeping FDR in office as well, but the Great Depression was no negligible part of that. And yeah, this is the GOAT. There ain't nothing greater. This is the Great Depression.
AKA, this is the Michael Jordan of recessions or market crashes, if you will. But I know we call this one the Great Depression, And again, if I'm not mistaken, we stopped calling it the Great Depression after the Great Depression because of how depressing calling it the Great Depression was. But I mean, there was reasonable doubt. I mean, Dow Jones falling 90%. I mean, I think that justifies calling something a depression. And then, I mean, 25% peak unemployment. I mean, that's insane, you know. So a 90% pullback in the market, you know, might cause a lot of depression, especially with the black and white photo. I think that's a cherry on top, guys.
Yeah, this is one of the iconic Great Depression photos. Is the 4 children for sale picture.
Wow.
But anyway, yeah, that takes us right into our next crash here, the recession of 1981, 1982. Take us away.
There we go. So July 1981, the recession that lasted about a couple years. S&P fell about 27%. So not as aggressive as 90% in the Dow Jones, but I mean, 20% is still a hefty pullback. 10.8% peak unemployment, not as bad. But when I think about how this is the 1980s now, I mean, that sounds pretty bad considering, I mean, it's near the 2000s. Triggered by tight monetary policy. Original goal was to curb inflation. Sounds like we've been dealing with this inflation problem for quite some time now, Gus, because this is 1980s. So, I mean, same problems, different day. But I mean, 27% pullback in 1980s in the S&P 500. That's a pretty decent market crash.
Yeah, no, I definitely agree. And yeah, it does. It just makes it all feel more real. I don't know, being this recent and having color photos and everything like that. But I agree. It does. 10.8% unemployment in 1981.
Yeah.
It strikes you more than 25% unemployment
Right.
in 1939 for some reason. But yeah, this is a slept on little mini recession. You don't usually hear people bring this one up when you talk about major crashes or recessions, but felt it was worthy of a spot here.
Yeah, I mean, it lasted about almost half a year. So, I mean, it gets a slot up there. The OG, I feel like this isn't the GOAT. It's not the Jordan crashes, but I feel like this is an OG. What are your thoughts on it?
Yeah, it's certainly got a high ceiling. You know, it's a promising crash. We got the dot-com bubble burst. I also feel like this one gets overshadowed a bit when people talk about the greatest crashes of all time, and it's primarily because it only affected the NASDAQ. Well, not exclusively, but primarily affected the NASDAQ. But yeah, dot-com bubble burst. March 2000 to October 2002, the NASDAQ fell 77%. And again, we're talking about the early 2000s here. This is not no Great Depression 90% fall. This is real and recent. People obviously remember this. NASDAQ fell 77%, 6.3% peak unemployment. It was fueled by massive speculation on internet companies, and most of those internet companies had unsustainable business models. I'll throw out an example. My dad tells me a story often about in 2001, which is the year I was born, I might add. He got a computer for free, and the business model was that for 3 years, the computer that you bought would have a strip of ads down the side. And then after 3 years, you had done your time, and the ads would be removed, and then the computer was just yours. And the company went under 2 months after he got the computer.
Wow.
And so then the ads just went away, and he won. So it was basically a free computer.
Wow. I mean, 2 months, that's a quick turnaround.
Yeah, no, exactly. And I mean, that's how this bubble was, as these companies would come and go, and they all had wacky business models. And so, this is a significant little crash.
You know what's really interesting, though? This has a NASDAQ pullback of 77%. That's massive. I mean, if we see something like that today, people are going to think actual UFOs are coming down or something. Nobody's going to care. Like, you know, to see something like that in today's age would be crazy. But I don't know, just right off the bat, is it much of a surprise? It's the dot-com bubble. It's one of the OG market crashes. I mean, the dot-com bubble, I think, can be just the headline itself is easily recognizable. But I mean, the internet really shifted how we do business into 10, 20 years after the dot-com crash. You know, I think the internet coming along was one of the biggest technological advances we've seen, I mean, in society. So is it a coincidence it pulled back 77%? I don't know, but that's what first comes to mind when we see the dot-com bubble.
Yeah, I've been drawing comparisons to the AI bubble right now, if you can call it a bubble as well. But it's clearly going to be the future, but it's incredibly oversaturated. Anyway, go on. Great Recession. Tell us about this one. We got another great one. We'll touch on that.
The Great Recession, December 2007 to June 2009, a little bit longer, a couple years. S&P fell 57%. 10% peak unemployment precipitated by collapse of the housing bubble led to the Dodd-Frank Act being passed. This one, let's see, what was I? Swinging on a swing set, I think I was doing while the market was crashing, not knowing my friends' parents, everybody was losing jobs. I didn't know things were hitting the fan at this time. I'm over here at recess. But I got to say, this is probably one of the more memorable ones. I would say, yes, obviously I was around for 2020. Now we're kind of living through 2025. But I think the 2008 one is one that I became most accustomed with. And I know it had a lot to do with the Lehman Brothers, and I mean the housing bubble, really sending assets to the ground. But I would rank this one. I'm gonna rank this one up there. I think this one's the most memorable one, at least. That's what I have to say about that before we start ranking all of them.
Yeah, I certainly agree. And yeah, we are about to throw all these on a proper tier list at the end, everybody. Don't worry about it. But yeah, I agree. I have this one high on my list.
Most definitely. Now, the world's famous market crash right here. What do we got for last but not least?
Well, we got two more. We still got to talk today. But yeah, no, this is the COVID-19 flash crash. Everyone remembers this well. This is when I started trading. Was pretty much smack in the middle of this situation. I believe March 2020 is when I placed my first trade, which is generally what people associate with.
So did you hear something about? Did you hear a headline or what went down when you got into the market around COVID?
No, it was quite the opposite. My senior year of high school got canceled for the remainder of the year, and I was bored. And I was reselling shoes at the time. I was looking for other avenues to make a little capital, and I realized that with options, you could make what I make on a pair of shoes in 10 minutes if you play your cards right. And so that was my introduction to options trading. And I've mentioned before, but after this year ended, I was like, well, where'd all the volatility go? Well, what do you mean I can't just get a 250% gainer in a day as long as I pick the right direction? Right. But anyway, February to April 2020. That's why it's called a flash crash. Just 2 months. S&P 500 fell 34% at the lowest, with 14.7% peak unemployment. Obviously, this is a different situation where the markets aren't driving the unemployment. COVID is driving the markets and the unemployment. But yeah, it was triggered by the global outbreak of COVID-19, a virus everyone has come to know so well. And there were unprecedented economic shutdowns. Everybody remembers. I'm sure everybody has a funny quarantine story that they could share. I was working at a UPS store at the time, so I got an essential worker badge. I was swinging that thing around like I was amazing. But yeah, flash crash, respectable crash, quick recovery, and had to make the list here.
Yeah. Quick recovery. I know we're going to rank these here in a little bit. We got a few minutes left. COVID. I mean, it feels like it was just yesterday. It's crazy to even think it was about 6 years ago, maybe 5.5, barely over 5. I mean, it's April right now. So it's crazy to think half a decade has passed. Feels like it was yesterday. I mean, I think the recovery of the COVID crash really dampened the weight of this move to the downside in terms of how it felt whenever we had that market crash. So we'll leave it at that one. We got one more. Liberation Day, April 2025 to when? Are we still in the middle of a market crash? But the S&P fell 17.6%. Peak unemployment still is to be determined. S&P 500 fell 5.5%. On April 4th, S&P 500 rose 9.5% on April 9th, 8th largest intraday gain in the S&P 500 history. So, I mean, we're living through some historical times right now, and we'll be able to fill in the blanks with these shortly, maybe sometime this year. But I know we're still going to rank this one, even though we're still in the midst of it. But I'm excited to rank this one. I'm curious where you're going to place this one. And I already have in mind where I'm going to put this one, Gus. So what are your thoughts on this before we go ahead and rank all of them?
Yeah, I'm interested to see where this one's going to go as well. I suppose the only thought I would have is that as we look at all of these previous crashes and then we look at this one, it's important to remember that just 20 years ago, the definition of a bad crash was losing 77% on your main index. So maybe we shouldn't freak out too much about this 17%. Yeah. I think we'll be able to get out of this hole.
I mean, I think we've been absolutely spoiled, guys. Because I mean, again, just looking back at the old data is a really nice reminder. But I mean, I can imagine if we got even a 77% crash, let alone a 90%, when on a downtick, it feels like everything's hitting the fan. But anyways, no, we got a little bit left. We're gonna have you go first.
Yeah, let's just go one by one. We can both give our rank, and then we can argue about it if we need to argue about it. Let's start somewhere easy. Great Depression is S tier, no question, right? I think
I would absolutely agree with it. Yeah, of course.
Yeah,
it's the Great Depression.
It's the Great Depression.
Got it.
So yeah, that's auto S tier. Well, what do you want to do next? I think it's also fair to put Great Recession in S tier. That's my only other S tier that I have listed.
That's fair. All right, what photo was this one for the Great?
Yeah,
there we go.
That one.
There we go. Oh, bear with me. There we go.
You're good.
There we go. I mean, COVID. Don't run around COVID. Most recent, most relevant. Very integral time period of our life. I would actually say COVID I think was the lightest market crash of all the examples that I have. What are your thoughts on COVID? I think the quickest recovery, I believe, in history of a market crash. And I mean, I feel if you blinked and you didn't look at your portfolio for a couple weeks, you didn't even realize we crashed. So
I
that's
agree.
where I would leave that one.
I agree. I had the exact same thought process on this one.
Okay.
I think that it's iconic, it's recent, it stands out, but in the broader scope, not that crazy. I think B or C tier is fair here.
That's fair. We're gonna go C.
Sure. Gotta leave some room. All right. What about our panics? What about our two 1800 panics? Personally, I'll go 1873 first. I think 1873 deserves an A tier just for being the OG. It's not the craziest crash we've ever had, but I also don't want to misjudge it because we don't have market information. It could have been like 60%, and we wouldn't know.
Right.
So yeah, I'm feeling like this one deserves A tier for the notoriety. This is subjective, by the way. This is totally subjective.
Absolutely. It's subjective, but not really. No. I would agree. I would think that the graphic definitely does it justice. I mean, this was 1873, and I think it depicts the stress and depression that was felt during that time period too. But I would say definitely before 1900s, don't have all the data, but that's a fair rank.
Yeah, and then in that same vein, 1893, kind of thinking B tier. Feel like it's the same thing, but it's just not the OG.
It goes hand in hand.
Yeah.
I would absolutely agree. Surprised this one is even in color, I will admit. So we can definitely give that one B tier.
That's true.
What do we got? We got Charlie Munger on this right one, or that's Charlie Munger, right?
I think so. I'm not sure. I clearly, if anybody was here Tuesday, I clearly am not super well versed on Charlie Munger, so I don't know. I don't want to speak on it. But anyway, yeah, we can go. That's recession of 81, 82. This one I have lowest on my list. I actually put D tier. Just because we can't have this big cluster at the top. Making this list at all means that you're a pretty legendary crash in the first place. So
that's valid.
This is like being the worst player in the NBA or something. Like, you're still really good.
It's still an achievement. Absolutely.
Exactly.
You might get dogged on from some fans, but they're sitting at home, typing from their couch, so.
Exactly. Yeah, and then .com bubble. What do you think about .com bubble before I give my take?
I don't think it has been that bad yet, but if we don't get the quote unquote correct outcomes, I do think it has potential to be one of the worser ones. I think it has the potential, just because I do feel we've been putting a Band-Aid on a bullet wound for the past who knows how long now, even prior to 2020. I feel we've always been putting a Band-Aid on a bullet wound. So if things somehow were to get bad, I think we're in a great position for things to really pull back. So I'd actually have it a little bit more high up on the list than I think you might have anticipated. But I want to hear your thoughts.
.com bubble. I mean, I think B tier is fair to me. Just because I have to take.
This one's a .com bubble.
Yeah, .com bubble. Yeah. We'll do modern last. But yeah, I have to go B tier here. I think it's, in terms of notoriety and historical significance, maybe worthy of higher, but it really only affected the NASDAQ, so I have a hard time kind of quantifying that one.
No, that's valid.
I say B tier. And then I do have on my end, I don't know if we can cut over to me real quick. I have I got our picture here for the last one. I don't know why it didn't update on your end. I don't really know what I'm doing making these tier lists. I just try my best.
I love it.
Anyway.
What are your thoughts, though, on the one that we're kind of living through right now, though? I kind of gave my piece on it a couple seconds ago.
Yeah, I think in terms of this modern Liberation Day crash, I'm hopeful that it will be short-lived, the way that the COVID flash crash was. Obviously, there's no certainty surrounding that. But I think that, as I said on the slide, when you contextualize it in the broader scheme of all of these massive market events that have happened, it does start to seem relatively minor. I mean, when you talk about just 5 years ago, the crash that we had was 34%, and obviously we recovered very quick, which kind of equalizes that out. But 34% is a massively significant number, and we're not hitting that with this. Hopefully. I don't know. We're not at the end of it. There could be lower lows to be had as well, so I don't want to speak out of turn. But at this time, I would have to quantify it as, I think I would say B tier. I think I'd say B tier as well. I don't know. I don't know if I think it's as significant as the .com bubble or not. It is affecting all markets and indices, so tough to nail that one down. But I have a B tier.
as a popular headline, like something like the dot-com bubble. Really, the way that I see this one right now, I feel like we're at the beginning. Like, I feel like we still have to see how a lot of these tariffs are going to unravel, and I think that's going to be the that's really going to be the catalyst for what if we see more upside or downside. And I think we're in the midst of a lot of uncertainty when it comes down to tariffs. So I would rank it at around the same spot. I think it has the potential to see. I think it still has potential to see more negative impact, but it really, again, just depends how we play out. But I just feel like we're 40%. I feel like we're in the second quarter right now. Best way I can describe it.
Yeah, I'm inclined to agree. But yeah, I know we're at time. You can go ahead.